Good morning, everyone. My name is Kevin. I just want to quickly give everyone a chance to come through. I see we have a couple of participants joining in. So let us give just 2 minutes for everyone to come through and then we can start. Good morning, everyone. Once again, I just want to give 1 more minute for everyone to come through and log in. So 11:03, we will start. All right. Good morning, everyone. Thank you for joining our webinar for simplifying your tax. That's the topic of today's webinar. I am joined here by John, our tax specialist, and we really hope that this will be a more inclusive journey where you can actually get more details regarding your tax questions and queries at the same time. You're welcome to use the Q&A box at the bottom to ask a few questions, and if we have enough time to run through it, we will do. Otherwise, we will answer your questions at a later stage through our vas@rakesh.com email address, where you can address that there too. All right, so without wasting any further time, John, over to you.
Cool,
Oh,
thank
please,
you.
just one more thing, John, just to let everyone know that the webinar is recorded for quality and training purposes and will be made available to you post the webinar. At the same time, also addressing your questions and your queries, we'll also help to see if we can actually answer them too. All right, thank you.
Thanks, Kevin. Hi everyone. My name's John. Just before we start, at the bottom of the screen on Zoom, you'll see a little box that says Q&A. Just type in your questions as we go. It's much better if and what I'll do is I'll answer the questions in the relevant part as we go along. We've got a good few hundred people joining us today. What I tend to do is that if I can see questions that are around a common theme, I'll just answer them all together. So yeah, please send them through as you have your questions. All right, so today, as I mentioned, we've got a good few hundred people on this morning. What I'll do, given that we are a bit closer and a bit more along the track in terms of tax, closer to filing, we'll still go through all the basics. So all of the basic requirements that every company has to do, but I'll try and spend a little bit more time on the exemptions, all right? Because what we're seeing is I'm getting a lot more questions around from clients saying, I think I'm exempt, but I'm not sure, right? And so I just want to try and get some clarity around that. Okay, so I will share my screen. Give me 1 second. Where are we? Here we are. Yeah. All right, enough of me on that screen. Okay, so what we'll go through today, we'll split it up into a few sections. We'll obviously go through the basics. For those of you that have joined one of our webinars before, a lot of that stuff will be sort of a bit of a repeat of what you already know. And then we'll spend a little bit more time on the deadlines, especially for people that have just recently opened their business. And then what I will try and spend most of the time on is around that question of, will I pay tax? I won't spend too much time on the opening and closing business because I think we've got, given the number of people on the call today, I'm just going to try and keep it as relevant for as big a group as possible. Okay, let's get into it. So the first question that is still the biggest question that I get, and I can already see people typing a very similar question, is who is actually taxable? Okay, now the concept of being taxable versus paying tax are two different things. Okay, so when I say taxable, I mean these are the companies or who actually has to comply with the corporate tax regime. Okay, which is very different to actually having to pay any tax. So it's a very easy rule. Every single company needs to comply with the corporate tax requirements. So it's the same as any other country, right, with the corporate tax regime. Every single company needs to file a tax return. Every single company needs to be registered, right? You're not necessarily going to pay tax, but there is no, you can't just sit back and do nothing, okay? It's the complete opposite of VAT, right? Just using VAT as an example. So if you think with VAT, you only have to register if you hit a certain threshold and you only have to pay in certain circumstances, right? Corporate tax is the opposite of that. So every company falls under corporate tax. So every company, starts from a position of you are a tax-paying business, and then you have to prove if that's not the case. Okay. So I'm already getting some questions saying, oh, my business earns under a certain amount of revenue or it's only under a certain amount of profit. That makes no difference. Okay. Every company needs to register. If you're under a threshold, if you're under the thresholds, which we'll go through later on, sure, that might mean that you don't pay any tax, but every company needs to register and every company will need to file a tax return as well. Think of it as, you have to prove, if you have a company in the UAE, you need to prove to the FTA, to the Federal Tax Authority, that you don't have to pay tax, or you need to prove the amount of tax that you have to pay. Okay, and that applies to every single company. The way that you do prove that is by filing a tax return, and when you file that tax return, you need to provide accounting reports. Okay, now, obviously, companies that have zero activity at all, they probably don't have any accounting records to submit. They still have to submit blank, zero accounting records. But for any company that has any kind of activity, you still need to provide proper accounting records as well. So registration is just a one-off task, right? So every company needs to do it. You should have all registered already if you have a company. If you haven't registered yet, unfortunately, you've probably got a 10,000 dirham fine, which is very, very hard to waive. And the only sort of exception to that is if you've only opened your company in the last couple of months, then you might still be within the time frame for registration. But every company has to have, every other company has to have had registered by now. I think the FTA made that very clear. There was lots of communications about that. So they are very, very reluctant to waive that 10,000 dirham fine if you have not registered for corporate tax yet. Okay. The first thing I'm going to run through is the question around when you actually become taxable. So when do all of these deadlines apply? Okay. actually, I'm just going to run back on this because I'm just getting some questions through already. So lots of questions saying, you know, we do lots of all our businesses outside the UAE. That doesn't matter, right? We only have a small amount of turnover. Again, irrelevant. I am under the profit threshold. Again, that doesn't matter either. You have to be registered and you have to file a tax return. The FTA has no way of knowing that you are under these thresholds, right? Unless you register and file a tax return. Otherwise, they'll be coming after you for penalties and filing and all that sort of stuff. Okay, so if you're not registered and you have a company, you need to get onto that straight away. Okay, you'll probably have a 10,000 dirham fine if you haven't registered yet. Unfortunately, like I said, that will be the first of the penalties that you'll be paying. This is something that needs to be done immediately, with no exceptions. Okay. One of the questions we're getting a lot of is, when do I actually become taxable? So when are my deadlines? Okay, so registration deadline, and I'll jump to that first, right? You have to have registered within 90 days of your company being established. All right, so like I said, most companies should have registered already, pretty much all of them. The only exception is if you've only opened your business in the last couple of months, then you've got, you've probably still got time. If you've just opened your business today, you've got 90 days to register it and when I say register for corporate tax, I mean registered with the Federal Tax Authority for corporate tax. When we talk about being taxable, okay, so registration applies for everyone. Put that aside for a second. When do you actually become taxable? So when does your business fall under the tax regime? Sorry, and I'm still getting questions here. Questions like, oh, I've just got a holding activity, there's no financial transactions, do I still need to register? Yeah, again, I probably will end up repeating this a few times. You have to register, okay? It doesn't matter what your activities are. It doesn't matter if you did absolutely nothing with the company. It doesn't matter if you set up the company 10 years ago and you never renewed the trade license. None of that matters. You need to be registered for corporate tax. Offshore companies, RAC ICC, also have to register. Everybody has to register. You just do it once, but yeah, unfortunately, if you haven't done it yet, you'll have that 10,000 dirham fine. All right. I hope I've made that clear. Sorry for sounding like a broken record, but I'm still seeing questions around, do I have to register if I do this or this or this? You have to register, okay? When am I taxable? So this is the next question that most people sort of have, because they're not sure when their company actually, falls into corporate tax. So you need to first look at your financial year, and then you need to work out which financial year falls under corporate tax. So this all depends on when you open the company. Okay, now most companies fall into this first bucket on top, right? So if you opened your company prior to June 2023, right? So if you ever had a company for a couple of years, you opened it, back in 2018, 2010, 2022, or in the first half of 2023, right? Then your default tax year, or your default financial year, is January to December, okay? And your first tax year was 2024, okay? Now that means that you have to submit a tax filing by September this year, okay? So most companies fall into that bucket. So you opened it prior to June 2023, okay? If you opened your company between July 2023 to June 2024, by the way, I know these dates seem very arbitrary and just kind of made up, but this is the way the law has been written. So don't worry about the reason why these dates are enforced. Just focus on when you opened your company and then the deadline that applies, okay? If we go into why, then we'll spend the whole half hour or the whole hour going around in circles on this. So it's very simplified here. So opened your company prior to June 2023, your first tax year was 2024 last year, and your deadline for filing is September this year. If you opened your company between the months of July 2023 to June 2024, so we're looking at the bottom half of this slide, then your first tax year actually runs from the day you opened it, right, through to December 2024, and you also have the same filing deadline. Okay. If you opened your company after July 2024, right? Sorry, July 2024 or later, then you've got what's called a long first tax year, and you're still in your first tax year. It runs till the end of this year, and your filing date is September next year. Okay, so that's if you opened your company in the second half of 2024 or later. Now you'll notice that I skipped around the month of June 2023. Okay, so if you opened your company back within the month of June 2023, okay, unfortunately, the way the tax law was written, that is called an unlucky pocket or an unlucky date. You actually had to file a tax return by December 2024. If you fall into this bucket, so if you opened your company specifically in the month of June 2023, please reach out to us because it's a bit of a strange one. The FTA sort of acknowledge that it's a bit of an off one, so they gave some extra deadlines and some extra timeframes and stuff. So if you opened your company in June 2023 and you hadn't filed a tax return, reach out to us at vaz@rakes.com. And we can help you out. Already getting some questions here. If I open my company in 2025, so you'll see on the top half of this slide, I've said if you opened your company from July 2024 or later, right? So if you opened your company in 2025, let's say you opened it last month, your first tax year runs to the end of 2025, so December 2025, and you need to file by September 2026. Okay, hopefully that's all clear. Yeah, if you opened it, there we go. I've still got people here saying, okay, I opened in Jan 2024, right? So let's go back up. So if you opened your company between July 2023, so the bottom half of the slide, if you opened your company from July 2023 to June 2024, right? So January 2024 is within that time frame, right? That means that your tax year ran to the end of 2024 and your filing is by September 2025. Okay. All right, let me just bring that back up. Okay, sorry, I'm just going through a few questions here. All right, I'm still getting questions around specific dates. Look, I think this recording is going to be available. So if you're unsure, what your actual filing date is, having gone through this, just reach out to us at vaz.rakes.com. Another way is you can just look at your corporate tax certificate, but you need to make sure you look at the most recent one because the FTA revised corporate tax certificates a couple of times. So if you go onto your registration and view your corporate tax certificate, it normally shows what your first tax filing is. Okay. Yeah. Okay. Let's move on, eh? So just a reminder, and I've purposely put the slide again because normally by now I've also got a whole bunch of questions of the same theme saying, I'm in a free zone. Do I need to register? So just a reminder, it doesn't matter where you are registered. It doesn't matter what you do. It doesn't matter what your revenue is. You have to register and you have to file a tax return and you need to submit proper accounting records. I'll go through what proper accounting records are. Okay, I'm just jumping through some more questions. Register in free zone. Yes, you have to register. Registration, just to repeat, registration is just one off. Okay, so you only register once and then you're on the FTA system. All right, we've already talked about this, remember? So make sure you register if you haven't already. Okay, so the second of the compliance requirements was around accounting. So the general standard that is in force for UAE corporate tax is International Financial Reporting Standards, okay, IFRS. There are some other rules around depending on the type or the size of your business, right? So there's a different accounting standard called IFRS for SMEs, and then some companies can use cash basis accounting. But regardless, it doesn't matter which standard you can use. You do have to produce a statement of profit and loss or an income statement and a balance sheet. Okay, so the FTA requires this whenever you file your tax return. Now, obviously, if you have no activity, no revenue, then all you'll be submitting is accounts that have zeros on them. That's fine. But if you have any kind of activity, right? So you've got a little bit of revenue or you've got some expenses and stuff going through, then you have to produce these financial statements. You can't just submit bank statements. You can't just send in some Excel sheets, right? The FTA just rejects that. The FTA now operates the same as every other country in the world with corporate tax, right? There is a standardized tax filing that you need to do, and that includes financial statements, same as everywhere else in the world, okay? You cannot just, like I said, you cannot just send in some bank statements. You cannot just, try to do something together in Excel, right? So even think of it this way, right? If you are trying to show that you are under a certain profit threshold or under a certain revenue threshold, you need to show that that is the case. Okay, so you need to prove to the Federal Tax Authority that you are under those thresholds. And the way you do that is by submitting financial statements. Okay, now, one of the things, I'll talk about audit in a second, but normally I get questions here saying, do I need an audit? There are only two, for tax purposes, there are two instances where you need to do an audit, okay? One is if your revenue is over 50 million dirhams, that's 50, then you need to do an audit for your tax filing. Or if you are trying to get the qualifying free zone exemption, which we'll go through in detail, then you also need an audit. But for a standard filing, right? So if you are just doing, if you're filing a return under the profit threshold or small business relief, which we'll go through, most filings do not require an audit, okay? But what the FTA have said, they've said, okay, you don't need to do an audit, right? But you do need to make sure that your accounts are done to the correct accounting standard, okay? Now, that is totally understandable because as you'll see shortly, there are many exemptions available, and those exemptions all depend on what your financial statements say. So just to recap, right, before we move on, everybody has to register and everybody has to file a tax return. So every company needs to register, every company needs to file a tax return. And in that tax return, you will submit financial statements which prove your tax position, okay? There are quite significant penalties for not doing proper accounting, okay? So if the FTA picks up that you have not done correct accounting, you get an immediate 10,000 dirham fine, okay? And then if you cannot rectify that, so if you can't fix up the accounts, you get an additional 10,000 dirham fine, okay? So what you need to remember is, so if you're not already doing accounting, please get onto it, right? You need to be doing this for your tax filing. Yes, it's an additional burden, right? But unfortunately, tax is here, right? And we are now exactly the same as the rest of the world. Like I keep saying, you cannot just sit back and go, oh, I made no money, don't worry about me. You need to prove that to the tax authorities. Okay. There are, if you're not using an accountant, so what you obviously, so just here at Rackers, we provide all of these services, right? Obviously, we provide accounting services. We have tax packages that include the registration and the filing and bookkeeping at a very affordable price. At minimum, you need to be using some kind of accounting software like Wafak or Zoho or Xero, right? But you need to also make sure that you know what you're doing when you do that. You will save yourself so much money if you do this properly and file for, the correct exemption so that down the track you don't end up paying tax, or even worse, getting penalties. All right. The biggest question of all is, will I pay tax? So we'll go through these in detail, but basically there are three, or think of it as four levels that you need to fail before you end up actually paying any tax. So the first one is, think of it as the free zone exemption. It's called the qualifying free zone person exemption, but we just refer to it as the free zone exemption. Now, free zones are not exempt, or free zone companies are not exempt from paying tax, okay? In certain circumstances, they might be, right? And we'll go through those circumstances in a second. But one thing I want to make very, very clear is that there was a big misconception or a lot of confusion around companies that only did business outside the UAE. Okay, people thought that those companies would be exempt from corporate tax. That is absolutely not the case. Okay, so it doesn't matter if you're just doing business outside the UAE. That is still taxable. Okay. The question of, oh, I'm doing business outside the UAE only, that really has no relevance for corporate tax. Okay, so you just sort of need to forget about that, so to speak. We'll go through the qualifying free zone or the free zone exemption first. So I'm just going to skip around a little bit, sorry. So the rules around the free zone exemption. So first is one way you can qualify for it is, think of this as a geography test. Okay, so if you're a free zone company, right? So say we're in Rackers, right? If all of your sales are to free zone companies, okay, not necessarily Rackers, but any other, any company in any UAE free zone, if all your sales go to other free zone companies, then you can meet this criteria for the exemption. Okay. Now, very rarely do we have companies like this, right? Most companies either sell outside the UAE or they have sales in the mainland or a mix of all three, right? Which means that they don't qualify for this. Okay, so remember, this is only one of a few criteria that we're going to go through, but this is the first one that we'll look at, which is if you just have your sales to other free zone companies, then you meet this criteria, right? And you can qualify for the exemption. The only clients that I've had that have met this are things like, small companies that only have one or two clients, and those two clients happen to be in a free zone, okay? Most companies that have multiple or numerous clients, right? They're selling outside the UAE, they're selling in the mainland, they're selling free zones, and so they don't qualify for this exemption, okay? I'm already getting questions, if I've got sales outside the UAE, do I qualify? No, okay? So you don't qualify for this one. Now, if you sell outside the free zones, okay, you can still qualify for this exemption, but only if you are doing a qualifying activity, okay? So just before we move on, so if you're just selling within the free zones, you can be doing any activities. If you're selling outside the free zones, you have to be doing a qualifying activity to get the exemption. Okay? These are the qualifying activities. Now, I'm going to go through a couple of these in a bit more detail towards the end. We'll come back to this, right? But as you can see, most of the qualifying activities are around heavy industry. So manufacturing, processing, operation of ships, leasing of aircraft, things like that. Okay, generally speaking, there are no service industries included in this or service activities, with the exception of logistics. But logistics services are very much things like brokering for shipping containers and things like that. It's very much associated with shipping and transport. We will go through a couple of these, like I said, in a bit more detail, especially the designated zone trading. But yeah, generally speaking, most of the clients that I've spoken to who do things like marketing consultancy or IT consultancy, none of those qualify under the qualifying activities. So just to recap one more time, for the qualifying, well, for the free zone exemption, okay, if you just sell to free zone companies, then you'll meet that income criteria. Or if you sell outside the free zones, you'll meet the income criteria only if you're doing a qualifying activity. Okay. It only matters where you are selling to. It doesn't matter where you are buying from. Okay. So these tests are just done on your revenue and your revenue sources, your income sources. So you could be buying goods from overseas, but if your sales just come from UAE free zones, that's fine, right? And if your sales are just, from qualifying activities, that's also fine. Okay. I've got a few people here asking around how they can get more information on this. Just email VAS at rakes.com. and I have some more details around packages and stuff on the last slide. So we'll get to that shortly. So back on this will I pay tax question. So we've just gone through the first exemption criteria. If you don't meet those criteria, not to worry, then we look at the next criteria available, and this one is called small business relief. Okay, small business relief is available to every single company, and it's very simple. It says if your revenue is less than 3 million dirhams, so that's your annual revenue or your revenue in the tax period is less than 3 million dirhams, you don't need to pay tax. Okay. Now, just to clarify, that is on revenue, not profit. Okay, so that is your gross revenue, your total sales, your top line income. Okay, if that's less than 3 million dirhams, you don't pay tax. Reminder, you still have to go through and register and file a tax return, and you need to provide accounts which prove that your revenue was less than 3 million. Okay, but when you do this tax return, you go through all those steps, and then you get the option of filing under small business relief, and you don't pay any tax. Okay. I'll go through why I've got these arrows here in a second, but let's say that you don't meet the criteria for the free zone exemption, and let's say that your revenue is more than 3 million. Okay, so you don't get small business relief. Then, and only then, does the FTA start looking at your profit. Okay, so up until this point, the FTA would have only been looking at your revenue, and if you met one of these criteria, then your tax return stops at that point, and they don't even look at your profit. Okay, it's only if you miss out on on all of those exemptions that we start looking at your profit. Okay, and that is when we start looking at this tax-free threshold on profit, which is 375,000 dirhams. Okay, so I'll explain an example, all right? Let's say you are a marketing consultancy with clients outside the UAE, okay? So marketing consultancy, so your clients are outside the UAE, so you don't meet this criteria. You're a marketing consultancy, which is not a qualifying activity. Okay, so you don't get this first box. You're not a free zone exempt company. Okay. If your revenue was 2.5 million, okay, then great. You don't pay any tax, okay, because you're under small business relief of 3 million, and that's where your tax return stops. You don't pay tax. They don't even look at your profit, okay. But let's say your revenue was 4 million, okay. That means, so we've established that you don't get the free zone exemption because of your activities. Your revenue is 4 million, so you don't get small business relief. And therefore they start looking at your profit, okay? If your profit was, say, 350,000 dirhams, okay, that profit is under the tax-free threshold, so you wouldn't pay any tax. If your revenue was 4 million, but your profit was 1 million, okay, you still get the tax-free threshold on the first 375,000 of profit. But then the remaining 625,000 of profit is taxed at 9%. So that's so you'd end up paying about 60,000 dirhams in tax. Now the question that we quite often get is, well, my revenue is under 3 million, but my profit's more than 375. So just a reminder that if your revenue is less than 3 million, it stops there. Okay, they don't look at your profit, and the tax-free threshold doesn't even matter. Okay. So you could have 2.5 million of revenue and 2 million of profit, but you don't pay any tax because your revenue is under that small business relief. Okay. It's only if your revenue goes over 3 million that you'll end up paying any tax, and only if your profit's over 375. Okay. Questions here. I have, will the 3 million apply only to revenue earned outside the free zones or total? So 3 million is your total revenue. Okay, so the reason I've put these into separate boxes is they are very different exemptions. All of them are exemptions in their own right, but they are very, very separate. So the free zone, just to kind of recap it at a summary level, the free zone exemption looks at the nature of your revenue. Okay, so is it from the free zone companies or is it for a qualifying activity? Okay, if you fail that, right, then the small business relief is a completely different exemption. It only looks at the amount of your revenue. It doesn't look at the nature of the revenue or the type of the revenue. It just says, is your revenue 3 million dirhams or less? If the answer is yes, great, you're exempt. Okay, just a second. I just realized that. Sorry, give me one moment. I'm just gonna go through some more questions. Give me 1 second. Okay. Now, I'll come back to that because I'm just noticing that I generally wait a little while because I know some questions will come through and all of that. On that last slide, you'll see that I have these in order. Okay, so qualifying free zone person, then small business relief, then tax-free threshold. There is a reason that you want to go for those in that order. Okay, so the free zone exemption has no time limit on it. Okay, so that goes, as far as we know, indefinitely. Okay, so this year, next year, keeps going. Once you qualify for that exemption, all right, you can keep on qualifying in future as long as you keep meeting that criteria. If you fail the free zone exemption, you have to sit out for another 4 years. Okay, so if you're looking at the top row here, so let's say you qualify for the free zone exemption in 2024, 25, 26, great. If you fail to qualify for the free zone exemption in 2024, you can't come back in until 2029. Okay. Now that becomes significant when you look at small business relief. So small business relief, unlike the free zone exemption, small business relief only goes for 2024, 2025, and 2026. Okay. and then for the 2027 tax year, it disappears. All right. So what that means is that if you miss out on the free zone exemption, or if you go for small business relief, right, you can't go into the free zone exemption until 2029. Right? That means that you'll have 2 years of a taxable business, right, before you can actually opt back into that exemption. So what else? Point of this being is that the small business relief option seems easier to go for, okay, because all you need to do is prove that your revenue is less than 3 million. But please, if you can qualify for the free zone exemption, you definitely want to go for that, because that will mean that you remain exempt, indefinitely. Whereas small business relief, you'll be exempt for 3 years, and then you can't go into that free zone exemption until you've been taxable for 2 more years. All right. Still getting questions. I'm just going to jump back to here because this is where we get most of the questions. Still getting questions saying, I don't have any activity. Do I need to register for corporate tax? Yes, you have to register for corporate tax and file a tax return. Let me just run through these again. Some more questions. Business free zone to free zone remains tax free regardless of the activity. Yes. So I'll just recap these again. So if you're just doing business within the free zone layer, think of it as like a bubble of free zones. If you're just doing free zone to free zone business, or even within the same free zone or between other free zones, that is exempt activity. It's only once you go outside the free zones that you need to be doing a qualifying activity. All right. Some of the questions here. Another question here, I do not do business in the UAE. Do I have to register for corporate tax? Yes, you have to register for corporate tax. All right. Here we go. So some questions here around the timing of small business relief. So sorry I'm jumping around a little bit, but I will be guided by the questions somewhat. So questions here saying, if I only qualify for small business relief, does that mean that from 2027, I will be a taxable business? Yes, you will be. Okay. Now, one of the most common questions we get, and I can already see it coming up here, is around owners paying themselves salaries. So the most common client I have is a business with 1, 2, or 3 people. Okay. They've got an owner, maybe a couple of employees, right? Revenue's less than 3 million dirhams, so they've got small business relief. And their main expense, or the main thing that comes out of the business, is the money that the owner withdraws. Okay. Now, there are no specified rules yet in the law around what that can look like. The general rule is that, well, think of it as 2 things, okay? If you're an owner and you're withdrawing money from the business, you want that to be a salary instead of a dividend, okay? Because salaries are a deductible expense. Dividends are paid out from profits after tax, okay? So dividends are not deductible. If your revenue is under 3 million, then the way you pull the money out of the business is irrelevant until 2027, okay? Because if your revenue is less than 3 million, they don't look at your expenses, they don't look at your profit, so you can pull it out as a dividend or a salary, it doesn't matter, all right? It's not going to impact your tax because your revenue is less than 3 million, so you don't pay any tax. But let's say by 2020, let's look at 2027, right? By 2027, if you're the owner of the business, you want to make sure that you are able to withdraw your salary withdraw that money as a deductible salary. All right. And there are 2 parts to this. So the first part, think of it as the compliance part. So do you have the correct contract and visa and setup and everything, right? So that you are entitled to withdraw a salary from that company. All right. So there are a few scenarios here, right? And And so if you are listed on the company, if you are a employee of the company, all right, so let's say you are a managing director on your visa, or an executive director on the visa, sorry, or an executive manager on the visa, those kind of job titles, those are employee job titles on your visa. And then you also have to have a contract, an employment contract with the company and registered with the authority. Okay. So you need to have the right visa and the employment contract in place. What is quite common is people will be on an investor visa in their company. All right. Now, if you are a investor visa in your company, you can't actually, in most cases, you can't also be an employee of the company. Okay. So if you check your Emirates ID on the back, it might say you're listed as an investor. All right. So what you need to make sure that by 2027, you've just switched over your visa so that you are a employee, or you can be an employee of the company, right? And you need to make sure you have an employment contract registered with the authority, with RACES, for example. Okay, so think of that as part one, sort of a compliance documentation side of things, to make sure that you are actually in the right position to withdraw a salary. Okay, to illustrate that better, an investor doesn't pull salaries out of a company. An investor pulls dividends because they are the investor in the company. All right, dividends are not tax deductible. Okay, so if you're the investor in the company, you're pulling out dividends, those are not tax deductible. If you are an employee of the company, you can pull out a visa. Even if you're the owner, you can be an employee as well, and you can pull out a salary. The most common question I get off the back of this is, okay, well, if I've got a golden visa or some other type of visa, can I be an employee of the company? And the answer is yes. Okay, so if you've got a golden visa from, let's say you've got a golden visa from property investment, okay, yes, that entitles you to live in the UAE. You can then go and have an employment contract with a company and work for that company. Okay, so your employment visa doesn't have to be under the company. You just need to make sure that you can have that. Better way of looking at it is you need to be able to register the employment contract, okay? And you can't do that if you're the investor in most cases. There are many other types of visas that you can register the employment contract, but it needs to be an official employment contract with the company. Okay. Now, just a reminder because I like to just keep on reminding you on this. This only matters if your revenue is over 3 million dirhams, or if you're just looking ahead to 2027. Okay, because reminder, small business relief, they don't look at your expenses, so they don't even care. They don't care how you're pulling money out of the business. Okay. Part two of the owner's salary piece, is around the amount that you can pay to yourself. Okay, so part one is getting all the documentation and everything in place so that you are entitled to pull out a salary. And then part two is how much can you actually pull out of as a salary amount. Now, the only guidance that the ministry and the FTA have put in place is that the amount, any transaction with a connected person, right? A connected person is the owner or the spouse or their grandchildren or niece, nephew, children, all of that, right? Any connected person transaction, including owners' salaries, needs to be at market value. Okay, now it is very, very hard to try and specify in the law what market value is. There are a couple of ways that you can try and determine this. All right. Generally speaking, there are two approaches. One is that, if you've been working in this industry for a long time, you probably have a pretty good idea of what someone in your position would be earning as a salary. Okay. And that should be the guide for how much you pull out of your own company as a salary for yourself. So if you're running a management consultancy, for example, right? How much, you probably have a good idea of how much a consulting partner in like a mid-sized firm would earn, and that should be your guide for how much you pull out as a salary. Okay, that's approach number one. which is, think of it as the internal guidance approach, right? There is another approach, which is you can actually go and do a full benchmarking exercise, right? So, there are a number of labor firms or recruitment firms that do this. It's quite expensive, think, 50 to 100,000 dirhams to do a benchmarking exercise, and they will come back to you and say, all right, this is sort of the parameters or the brackets around which that sort of role would earn. Majority of my clients, the only clients that I have that go through that whole benchmarking exercise are the ones that are, looking at a large team of people that are, multiple connected persons, and they need to ensure that they have everything aligned beforehand. Most cases, people have a pretty good idea of what a market salary for their role is, and that is the amount that they can pull out of their company. As you can probably tell from what I'm saying, you can't just go and pull out all of the earnings as salary and claim, no profit. Okay. If you're selling products, right? And you're the manager of the factory that is, of your own factory, right? You can't just withdraw all the money as a salary as the manager, okay? Because that's just not market value, it's not realistic, and the FTA will make you add that back. Okay. Yeah, so I have a lot of people, I have a lot of clients coming in going, I've worked out this loophole, I'm just going to pay myself, 3 million dirhams in salary, right? Whereas they're not even working in the business, right? So, the FTA have been very, very clear around this that, you can't just go and put it this way, you can't go and put the company into a loss position by paying yourself a huge salary. Question here, if there's no business activity, how do we show salary? Okay, if there's no business activity and there's no revenue coming in, then you obviously can't withdraw a salary if there's no work being done in the business, if that makes sense. Okay. A number of questions coming through just to explain the exemptions again. So I'm going to jump back to it. I'm going to try and run over this whole section again because I know it's a little bit confusing. So the exemptions, all right? So we've established, just as a bit of a summary, right? We've established that every company needs to register. Every company needs to file a tax return. And every company with that tax return needs to file a set of financial accounts. Okay. The exemptions from paying tax. So when you file your tax return, you'll be filing under one of these three methods that I've got on the screen. So if you're a free zone company, you can get an exemption if you are only operating within the free zone. So you're just selling to free zone companies. Or if you're selling outside the free zones, you're doing a qualifying activity. Okay. If you don't qualify for either of those criteria, then you can look at the next exemption, which is called small business relief. Okay. Small business relief just looks at the total revenue of the company. It doesn't matter where that revenue comes from, doesn't matter where you're registered. If your total revenue for that year is less than 3 million dirhams, you don't pay any tax, and it doesn't matter what your profit is. Okay, it's just on revenue. If your revenue is more than 3 million dirhams, that's when the FTA looks at your profit. Okay, and the first 375,000 dirhams of profit is tax-free, and you pay 9% on any profits over 375. But just remember, they only look at your profit if your revenue is more than 3 million dirhams and you've missed out on that free zone exemption. Okay. Small business relief ends for 2027. So the 2027 tax year, right, will be taxable if your profit will be taxable even if your revenue is under 3 million from 2027 onwards. That is why the free zone exemption is the preferable exemption, because it goes on indefinitely. So if you qualify for the free zone exemption, that is preferable over small business relief, because the free zone exemption, you have to sit out if you miss out on it. Okay, I'm quickly going to jump to the last slide just to show some packages and stuff, and then we're going to do a little bit, we're going to do a little bit more on, free zones. Okay, so look, if you have any questions around anything today or you're thinking about, you haven't started your bookkeeping or anything like that, please reach out to us at vaz@rackers.com. You can see the email address at the top of the slide there. Now, I would highly recommend that you go with one of the packages. They're certainly much more economic. The main thing here is you need to get onto the accounting, okay? Like the tax filing and stuff, yes, we can do that. We've got until September, but you don't want to wait until September and then try and do accounting for 2024, and we're scrambling around trying to find old receipts and invoices and stuff. Please, if you haven't got onto your accounting and you have an active business, please get onto that, straight away. I'd recommend you just go for one of the bundles, which are pretty reasonable. But yeah, there's been a few questions coming through saying, how do I do this? Where do I need to go? Please jump onto this or send an email to this email address and they can help out. There's questions here on, okay, what constitutes a transaction? So we're pretty flexible on that definition. If there are a whole lot of little bank charges, we're not going to say you've got 10 bank charges and that's 10 transactions, right? It's normally like a normal transaction. So a large invoice coming in or a large, expense amount going out or something like that. Okay. I'm just going to talk about a bit more about the free zone exemption. So, by the way, keep the questions coming in. I'm trying to answer them as we go. Lots of good questions. Just running through quickly. The question here around registration. I've got multiple trade licenses. So when you register, you have to register for all of them. Now, just remember, the activity on the trade license doesn't really matter. The FTA cares about what you actually did. Okay, so you might have 20 activities on your trade license, right? But all the FTA cares about is what you actually did. Okay, if you've got multiple trade licenses, when you register for corporate tax, you have to submit all 3, and they will use the deadline on the earliest one. Okay. If you've got multiple entities and multiple activities, there are different tax structuring ways we can look at that. It may be that one entity is exempt, one's not. Drop us an email on vaz@rackers, and we can have a look. Okay, and one more on small business. So the 3 million dirham threshold, that resets each tax year. So you get 3 million each year as your threshold. It's not cumulative over the few years. Questions here. I haven't yet registered for corporate tax. If I register now, I'll get the penalty. Is there any way to avoid them? Unfortunately, the FTA is really strict on that 10,000 dirham registration deadline. We've tried to waive, I think, 50 or 60 different ways. Doctor certificates, things like that. It's just not really, nothing is working. If you have a branch, the branch is considered part of the main entity, so you only do one corporate tax registration. Sorry, jumping through some questions really, really quickly there just to knock off some of those. All right, free zone exemption. There are a couple of extra criteria that you need to meet. So I've just talked about, sorry, I'm jumping around. I've only talked about the income criteria for the free zone exemption. Okay, there are a couple of other criteria you need to meet. The revenue criteria is by far the sort of difficult one. There are a couple of other things you need to do. So one, for the free zone exemption, you need to get an audit. Okay, Every other company only has to get an audit for tax if their revenue is over 50 million. But for the free zone exemption, if you want that, you need to get an audit as well. The other thing you need to be able to show is that you have economic substance in the free zone. Okay, now, sorry again, jumping around. What I mean by economic substance or adequate substance is you need to be able to show that you're actually running the business from the free zone. Okay, so you can't just have it set up as a tax shell or shell company in the free zone. So generally speaking, if you want that free zone exemption, you normally have to have an employee or employees who are doing the actual work that generates the revenue of that company. Okay, so the qualifying activities is certainly the hardest part, but you just need to also make sure that you are running a legitimate business, out of the free zone. Okay. Okay. Sorry, I'm jumping around a lot. I'm going to quickly go through a couple of the exemptions or the qualifying activities. All right. Designated zones are a different type of free zone. RACERS has designated zones within it. If you're not sure if your company is a designated zone, please reach out to us, especially if you are running a trading business, okay? Because trading businesses are an exempt activity if you are running it from a designated zone, all right? And what I mean by that is if you are buying and selling goods, if you're in a designated zone, then that activity will likely be exempt. It doesn't matter where you are doing that trading. It can be outside the UAE. You can be buying within the UAE and exporting it out. You can even be trading within the UAE, right? If your company is registered in a designated zone, that will be exempt. Okay, so if you're a designated zone company, you can, drive out of RACERS, drive down the road, buy some goods from a shop, drive across the road in the UAE, sell it to someone else, and that will be an exempt activity. Okay. If you're not sure if you're in a designated zone or the normal, the standard free zone, drop us an email on VASTac or Vaz at RACERS, and we can start looking at the tax treatment for you. Final one. Sorry, I know I'm just about to go over. There is an exemption for what's called qualifying commodities. So if you're a commodities trader, right, there's a small difference in what the rules were originally announced versus what they are now. If you're trading commodities, right, you don't have to be trading them on a recognized exchange. They just have to be of the same standard that is traded on a recognized exchange. Easiest example being gold. So if you're trading in gold, right, if you're trading it in 99.4% pure bullion form, then it doesn't matter where you're trading it. If you're buying and selling it, that's a qualifying commodity. If you're buying and selling gold, but it's in jewelry form, that's not commodity, so that doesn't count. Okay. This applies to any good that is traded on a recognized exchange. So cocoa beans, coffee beans, rice, wheat, oil, gas, all of that kind of stuff. And last one, very last one I want to talk about, and I'll just put this thing up here when I talk about it. Holding companies is the other one. Okay, so if you have a company and all it does is hold shares or hold ownership in another company, that will be an exempt activity, right? As long as you hold those positions for more than 12 months. So if you've got a company that all it does is holds, a share portfolio, that's fine, but you just need to be holding those equities for 12 months or more. Sorry, I raced through at the end there. I was very mindful of time. There were lots of good questions. Again, any questions around this? I'm still getting questions around, do I need to register for corporate tax? The answer is yes. I'm still getting questions, do I need to file a tax return? The answer is yes. Questions around, am I exempt from corporate tax? Please, if we have answered these questions a number of times through the presentation. If you're still unsure, drop us an email at vaz@racers.com. Because we'll need to go through the steps to make sure you file your tax return correctly. Again, if you haven't started or you haven't done your accounting, please reach out to us immediately. That is the most important part to get right so that we can file for the correct exemption. Okay. that was rapid. Thank you all for joining. Thank you for all the questions. I think we got nearly 200 questions. Tried to answer as many as we could. Any more, please let us know. If you're closing the business and you need to deregister, by the way, there are some steps that you do need to run through. Again, we provide that service. It's very prescriptive what you need to do. So send an email to faz@rakes.com, Faisal, and we can help that. Awesome.
Great. Thank you, John. Really appreciate it. That was
No
helpful.
worries.
Yeah. So, everyone, should you wish to have any information regarding this webinar, please note that we will be sharing the slides along with the recording to your registered email addresses when you did. And at the same time, we thank you for your participation, and we hopefully will bring you more during the course of the year. So please note that there will be a survey at the end of this webinar. We'd like your feedback so that we can bring you more and understand what more that we can do to better our presentations and webinars. Okay. Once again, thank you, John, and wishing you all a wonderful day further.
Thanks, everyone.